Sambre, Head Equities at GSP Mutual Fund, joining in on the show right now. Vinit, hi, morning. Great to have you on the show. Vinit, a lot of uncertainty still on the tariffs, but quite a resilient show by the markets, one must say. What's been your reading on the market and how the structure is built up right now with all the sectoral churn which is happening under the Nifty umbrella pretty much on a daily basis?
No, I totally agree that it has been quite uncertain, and I don't see the uncertainty actually ending for maybe some more time. And I think we'll have to live within that uncertainty. But I think the broad construct, if I have to think, is from a let's say just from the India perspective, maybe 1.5 years back, we had seen the macros turning negative with all these liquidity situation being tough, the banks becoming more restrictive on lending and all of that. I think from there on we have moved on, and I think the macros are looking now more supportive as far as building in some kind of growth for the future is concerned. And when I say that, what I mean is that we have seen now GST rationalization, the whole tax benefits, the interest rates is down, liquidity is good. So I would imagine that all this should eventually drive growth, which has been lackluster last 1 year, and which has been also the reason for the markets not performing. So I believe once the visibility on growth comes back, maybe we'll live with some of the global volatility, but the Indian growth has to sort of show signs of visibility, beyond which I believe the sustainable market directions should become, let's say, more visible.
All right, that's the take on the overall market right now. But Vinit, the biggest trigger that we have been talking about recently is actually the big GST reset, which is indeed seen to be giving a big boost to the consumption. Help us understand what within the consumption that you are liking at this point in time, because post 15th August, we have already seen a lot of excitement in select counters, be it autos, select discretionary names. But where do you believe the sectors can really make an impact? Because this is also seen to be a structural story.
Yeah, so I think a lot of the good news around GST maybe has got captured when we look at these businesses or companies within auto and consumer durables. So I think now it has to get supported by the growth, or maybe surprise on the growth side for the rally to sustain. But on the whole, I think I would call this a more transitional decision. And what I mean by that is I think we will see the balance of the economics shifting towards consumption now, and hence broadly we are sort of bullish on the consumption side of the story. That is number one. Number two, I think there are various ways to play the consumption story, and let me also say that it has been very tricky because the wallet share shifts are very difficult to sort of predict. But nonetheless, I think even the indirect beneficiaries like some of the NBFCs which are catering to the consumer consumption side would be one of the ways to look at this category. Beyond that, maybe some of the companies within the EMS space which are catering to the consumer categories of products which are growing. I think those can also be those can form part of the portfolios. So I think broadly the positioning around consumption needs to be higher, but I think the which segments, I think that will be a bit of a, I would say, driven by how shifts are taking place, and we'll have to be more active around how things shape out eventually. But auto is something which we are positive on despite the rally. We believe one of the ways to look at the segment is to play through the auto ancillaries, which might not have seen that kind of an outperformance yet, and they have maybe opportunities across the different technologies like EVs, the ICE, and all of that.
Vinit, I was just looking at the AMFI data yesterday on SIP flows, and it seems that there is a move out of small caps, and people are taking those market cap calls and finding comfort and safety right now in large caps. Do you think that's a wise strategy?
So I think, see, these are very top-down asset allocation calls, and if you look at the 6 months, small caps and mid caps have still, despite whatever noise we say, has been the best performing across different market capitalization spectrum. I think the small and mid caps needs a slightly longer term mindset, and I believe in the company's ability to deliver outperformance through I think multiple years going forward. So I am bullish on these two categories. Having said that, the volatility is going to be part of the game. I think the small and mid caps will be more volatile. That is known. It is been seen historically also. So the ability to maybe sustain some of that has to be there. And then I think these narratives will keep creating that volatility. But for long-term investors, I think it makes absolute sense to have core holding within the small and mid caps. I see, and this I'm not just saying from the category perspective, but when I look at the companies, the kind of work they're doing, the kind of differentiations, even small companies are trying to create and grow and aspire for higher growth, maybe be more acquisitive in nature at the moment. I think those gives us confidence that the future, while we have these short-term volatilities, but the future looks promising for these companies. So that's my overall take broadly.
So other than autos, Vinit, where else within, and let's specifically talk small and mid caps right now, where else do you find an opportunity and a profit pool?
Yeah, so see, as I mentioned, we have seen that there are 2-3 areas which are positioning well. So let's say the semiconductor value chain. I believe that this is something which is new to us. Government has been pushing. They are coming out with more support through ISM 1, 2 now in the annual. So I believe that there the profit pools are going to be large. Now, what companies, which companies, we are also trying to figure out. But I think that's an area which one has to sort of focus on. Beyond that, this whole energy transition is pulling up a lot of capital spends, and we are seeing companies actually participating, and this seems to be more sustainable, unlike previous cycles where it used to fizzle out. So while that worry will always remain, but I feel that the kind of companies, the largest companies announcing so much of capex and trying to build the value chain, I think there a lot of opportunities will emerge. And when I say that, I mean this is very technical, but let's say the whole power value chain, the whole the renewables as a value chain. I think one has to look into some of the companies out there. Hospitals has been a more stable kind of a growth category. We believe there is a large opportunity there because the penetration is low, the bed availability is low. And I think there we believe that the growth should be more sustainable out there. So I think these are some of the areas which, while valuations may not be very supportive, but I would say that whenever markets turn volatile, these areas should be looked into for building, more positioning within these companies.
I completely get that, Vinit. And, while it comes to power, yes, there are a few cheaper stocks available. But when you talked about the semicon supply chain or the healthcare sector, everything's run up already so much. Are valuations giving you that comfort?
So it's all about, we own it, so we hold it. Now,
Yeah.
whenever we get, maybe the market provides you that opportunity, and it does. We have seen March was a beautiful time. I mean, those are a time when we will also feel a bit jittery, but I think that's the time one gets sold and try to actually, build positions during that time. And I can one other aspect, maybe coming from the first question of yours, the global volatility. I can say that we are not going to be out of volatility. This is going to be part of the game where we will see stocks price correcting. September quarter may not turn out to be a great quarter. So I think just keep your research ready and try to build whenever the markets provide that opportunity as such.
So are you saying that, Vinit, we are likely to see some correction play out in the market in the near term, purely backed by earnings?
So, I mean, it's very, again, difficult to call out the short-term market moves, but I'm just going by the fundamentals right now. I believe, we know that because the GST announcement, I think there has been a deferment in terms of purchases across the board. So we are not in for a great quarter here. And anyways, there is a global volatility. So the news flows are going to remain volatile, and short term, I'm saying that markets could provide that opportunity, and I see volatility going forward. And hence, maybe these are the areas one should try to have a good handle on.
Great, right. Got that. But where within the entire India pool, and I'm just purely talking earnings here, Vinit, do you think there will be the key pressure points? Banks, for instance, last quarter we saw the credit growth concerns play out. Do you think that will also continue in September too?
Yeah, so when we think about the banks, whether the NIM pressure which was driven by the interest rate fall, is that over? I don't think so. I think the second quarter is going to be maybe the bottom quarter from that perspective. The credit growth is still to sort of inflect upwards, and we are still not seeing the credit growth in the system actually revive in a big way. So consumer overall, there has been deferral in purchases. The last 2 days back, insurance numbers came out, and we saw that the numbers were a bit more moderate as compared to the trend which is going on. And what we read is that maybe consumers are trying to defer because they see the GST benefits accruing. So I mean, these are clear signs that we have still not. And June quarter was again maybe a more, I can say, moderate quarter, and from there onwards we have not seen any big large trend change as such. So I'm just trying to read through maybe how the next 2-3 months flow through, and then I think we have to remain prepared. I'm not I want to say that we generally have a good long-term view on the market. Second half should be better, but when you asked about how should one position with these high valuations, I think that's the way one has to then think through the quarters ahead.
Right, Vinit, very quickly before we let you go, just want to get your view on cement. Since you've been positive on that space, there's been a GST cut over there too. But I remember last time we interacted, you had flagged off valuation concerns over there. Has anything improved since our last conversation when it comes to the cement space?
No, so I think the valuations are still high, but I would say that maybe we have to stay with the high valuations in the cement sector, because let me say that the cement sector has seen the low cycle, both in terms of the demand and in terms of the prices, which have actually not seen major hikes. Now, maybe the GST is not going to be, it's not, the category is not very price elastic as such, but still I would say as the demand cyclically improves and there is room for the companies to take some price increases, the earnings momentum should be strong. Not so much comfortable on the valuations even now, but wherever the earnings momentum is strong, I think one needs to position as far as the portfolios are concerned.
Right. Okay, Vinit, always great chatting with you. Thank you so much for your time once again.
Thank you so much. Bye.
That's the word coming in from the house of GSP, but let me just revisit what the market has settled in at. It was one of those very, very quiet starts, and it hasn't really budged anywhere from